Hello, and welcome to our channel Pursuit of Wealth. This channel is your ultimate destination for learning about finance and wealth, investing and crypto, informational and educational trends in finance management. If you are someone who wishes to become wealthy and looking for smart money management options, then we are fortunate to have found each other. If you want to become financially stable and want your dreams to become a reality, then it is essential to understand the rules of money. For that, you need to know how you can acquire money, how you can maintain it, and how you can grow it. Well, the best thing is understanding the rules is not difficult at all. These rules have been the same for hundreds of years. If you understand the core concepts, you are on the right track to understand the fundamental rules. By doing so, you will be able to maintain and build wealth beyond your wildest dreams. In today's video, we are going to discuss the most common rules that you can follow to achieve your financial goals. Before we get into the rules, let's understand the common issues related to money affecting people of all income levels. 3 money issues affect people of all income levels. Firstly, many people overspend in comparison to their income. Secondly, they save too little as compared to their earnings. Thirdly, they want to save money but don't know how to do it. Consequently, they live paycheck to paycheck, have limited financial resources for emergencies, and miss out on years of wealth-building chances. Overcoming these issues is not difficult, but it does need a shift in economic management approaches. So, if you want to avoid any financial issues, here are some of the common rules for money that you can follow to become financially successful. Money is a value exchange. What exactly is money? It is a value exchange. You provide value to the people by offering them a service or a product, and they pay for services. Let's suppose you own a company to conduct accounting and bookkeeping, and you keep a close eye on your company's spending. If you could hire a business mentor to teach you how to grow your revenues by $200,000 for $50,000, probably you'll go for it. When you publish a free journal or even pay to publish, you acknowledge that the benefit to your career is worth the time commitment. When you publish your journal for free or you pay for its publishing, you are acknowledging that the value it has to your career is worth your investment in terms of time. Aside from the financial value of an individual, we as a community make judgments about what we value. These are sometimes items that the market does not appreciate. When the governments invest in the humanities or arts, they signal that these things are beneficial for us as a society, even if they do not have a precise market value. Separate time and money. There's something about money that our working class doesn't grasp. It's no surprise that it's a rule of money that we haven't heard while we grow up. Your revenue will be constrained as long as time and money are intertwined. If you wanted to know how wealthy is someone, they would offer you their time worth. As a machine operator, Adam earns $50 per hour. Zampa makes $66 per hour as a civil engineer. These were the unfathomably wealthy individuals. Well, the wealthy people master separating their time from money. They create systems and devices that make them money even while you're not working. The internet has given birth to an entirely new generation which is good in distinguishing their time and money. Twitter thought leaders, YouTubers, Instagram influencers, and LinkedIn voices all make money regardless of whether they're awake or asleep because their platforms are monetized, whether by selling items, making ads, and marketing for affiliate websites. This lesson we should understand. The endowment funds of the universities generate money year after year without diminishing the principal, which is why they are such a long-term funding mechanism. Believe it or not, you can create your endowment fund. People who accumulate large sums of money will be able to live the life of their interest. This is the process of separating your time from money. Control your spending. Don't spend more than you need to. This mainly entails learning to live within your means and avoiding lifestyle creep. It's normal to desire to spend more when your income grows. However, if you want to increase your fortune, you must fight this impulse. If your income grows by $15,000, but you decide to take an extra trip to an exotic place, purchase new furnishings, and a new TV, you've just burned up your income gain. Unfortunately, this is not unusual. In New York City, there are bankers, attorneys, and doctors who have a negative net worth because they couldn't resist the impulse to update their lifestyle continuously. Spending money more minor than you earn and avoiding lifestyle encroachment will boost your net worth quickly. Always ensure that your overall costs are less than your entire revenue by a reasonable margin. When your income rises, raise your expenditure by a limited amount. The remainder should be saved or invested. Every extra dollar you earn will increase your fortune. Every time you submit your income, the rate at which your wealth rises accelerates. That is the fundamental secret to accumulating wealth. Avoid high-risk investments. There are several possibilities for investing your money available. The most important thing, though, is to avoid losing your principals. Losing your principal implies that all of your hard work to obtain that money has gone down the drain. That is dreadful. You should always choose assets you have thoroughly researched and are convinced will rise in value. Even if the future development is modest, be sure that you will not lose money. All investments carry some risk with them. The greater the potential benefit, the greater the possibility of loss. Your goal should be to make a balance between the following. Take specific changes that can pay off handsomely, but don't do so with all of your savings. Put the majority of your money into safe assets, and then you can take a few chances for higher returns. The barbell method might be a viable alternative in this case. Diversify and balance your portfolio. Most importantly, always do your homework before purchasing any asset. Make confident that the risk outweighs the possible reward and that the tips are grounded in reality. Do everything in moderation. Consider the majority of your portfolio's assets, ideally a broad worldwide mix of passive index funds, to be the real meat and potatoes of investing, to which you may add seasonings, herbs, and veggies. Do you want to invest in tech startups at an early stage? Maybe some real estate investing. Perhaps some private equity investments in non-public companies. Maybe a fund trading account. You don't have an issue with it as long as two requirements are met. Firstly, you must realize that the chances are stacked against you. Many billions of dollars are vigorously contending for returns in the same market. Professionals are continuously looking for an advantage, and even if they find one, there are no guarantees of success. Second, it should be a tiny percentage of your liquid net worth, possibly 5% to 10%. That should be a lot to keep you entertained and intellectually stimulated. Some people may even develop a talent for such investment. However, the sums should be minor enough not to hurt your financial strategy if the investment does not work out. Learn something new that few others can do. It is important to remember that the things that are required or needed in bulk are also not that valuable. For instance, if you've ever gone for hiring a plumber or purchasing a diamond ring, you'll understand. Some goods are in huge numbers, but they are not much needed or required in less demand. Universities are constantly producing degrees that have almost little market need. So, if you are looking to make money with your degree, go for a field, technology, or a skill that is high in demand, or find out how to make yourself different from everyone. Learn new skills and try to be unique and rare in your marketplace. Improve your ability to earn. In the end, you will be paid for an amount that you have the skill to earn. But if you want to increase and want to make more money, then you have to become wiser and more skilled. When you become more skillful, your contributions will be worth more. Like you can study new technical skills on your own, and you can learn more books to develop some powerful soft skills. You can also attend networking events. This can be a handy way to enhance your value to the society where people are willing to pay you more. Before going to learn a new skill, make sure it is unique. As said, it will decrease competition. Not only that, look for its potential return on investment. This way, you can put yourself in the right position to increase your income. Serve as many people as possible. The more people you influence, the more significant money you make. It's not a perfect science, but if you can scale the value you provide to individuals, you'll be able to make a lot of money. It would help if you listened to all of the gurus, including Dave Ramsey, Suze Orman, and David Bach. You should learn about their rich concepts and use them in your own life. But you'd notice something. According to their own money rules, none of these financial gurus became wealthy, such as putting aside a percentage of their wage every week or paying down debt quickly. Seek for a more favorable financial outlook. If you feel that you are a nice person and that money can provide you with a pleasant life and magnify your kindness, you will most likely begin to accumulate some. It's an essential money principle you should have learned. This mindset change is difficult for those who were reared in poverty. It isn't easy to unlearn all of the money mindsets you've acquired throughout the years. But it is possible by reading more financial literacy books. Spend time with affluent individuals you admire, whether in person or online. Try to figure out where your money beliefs come from. Ask yourself why you have them, and if they are helpful to you, begin to alter them. Act. As previously said, ill-advised decision-making and lousy conduct are the primary reasons why many people fail to accomplish their financial goals. Either directly or indirectly, all of the rules allude to behavioral concerns wrapped up in economic jargon. By understanding these following core rules, you can overcome most of your financial issues. That's it for the video. Please subscribe to the channel, like the video, and press the bell icon for more amazing content about wealth management and finance-related videos. Success is coming your way. Keep your doors open. See ya till the next time.